Welcome to Mad Money. Welcome to Cramer. My friends, I'm just trying to help you make some money. My job is not just to entertain, but to put it in context. Call me at 1-800-743-CBC or tweet me at Jim Cramer. Today, we celebrate 30 years of CNBC's Squawk Box, the legendary morning show that democratized stocks like no other. The highs, the lows, the humor, the hammering. It was all there in one incredible package, must-watch package. When I say must-watch, I mean I had just started my hedge fund when the show came on CBC, and I couldn't believe it. But I had to have a television put into my office, a television, actual TV, to be competitive with other hedge funds. I had to watch. I had to be tuned into Squawk. So I knew what was going to happen that day with the market. Television at the office? Who could believe such a thing? But you needed it because Squawk was indispensable. Nowadays, it goes without saying that you'll have TVs tuned to CNBC all over the place in virtually any hedge fund. But back then, it was Squawk that made you do it. And you know what's the craziest thing? Not only did we celebrate the show all day, the market celebrated it too. Although you might not be able to tell from the averages, the Dow slipped 220 points today. S&P gained 0.3%. NASDAQ inched up 0.03%. But you know what? It sure did feel like the old days here. Yeah, just like the early days of Squawk Box, we had big individual stocks soaring, stocks of companies that were easy to pick out that you could have made a ton of money with. Stocks like Oracle, which shot up a stunning 36% today.
How's a pleasure.
That's a monumental move. Now, I want you to think of it like this. Let's say you like the stock of Oracle, okay? Do you know that if you had bought, say, let's do this, 10 shares of Oracle at its lowest close in April, putting to work roughly $1,200, it would now be worth almost $3,300. Do you know that's a 167% return in less than 5 months? An individual stock gave you that bang for your buck in less than a half a year. Think about what a difference that could make in your life. Oh, and can you imagine if you had more money than that to put to work? It could change your life. It could change your lifestyle. And this is not some fly-by-night speculative operation you've been buying. It is one of the largest software companies on earth. It's almost $1 trillion. I mentioned that remarkable Oracle move largely based on a forecast about gigantic data center growth that the company gave you on last night's astonishing earnings call, and it was a jaw drop. I mean, I couldn't believe it when I heard it. I thought they were making this stuff up. It was incredible because many Americans first discovered that you could make that kind of money owning a piece of a company in the 90s when Squawk Box first got going. Sadly, I think that much of that had been forgotten. I do believe that things are changing, though. And again, it sure felt like the 1990s during the hour I'm on television, 9 and 10, and it wasn't just reminiscent. Plus, today we got a great start for Klarna. It's a buy now, pay later outfit that just came public and shot up 15% on its first day. Sure, it seems like an impossibility to get any stock on an IPO. But again, if you were watching Squawk Box when it started, you would have gotten the bug. You would have figured out how to buy some of the shares in this company. Klarna is a known financial services company that you would have heard about in the banner among David Faber, Joe Kernan, and the late Mark Haynes. You would have called your broker. Maybe you would have gotten some stock. Maybe you would have made some money. That's something you learned to do from the show. It wasn't just about index funds. Now, I know this because, I became part of the Squawk gang a couple of years into it. I've been a regular on Good Morning America 2 to 3 days a week to talk about the stock market and the economy. Oh, it was a great gig. But I had the bug for Squawk Box. Mark Haynes was incredibly opinionated. He would praise some stocks and blast others, always with a thoughtful thesis for his decisions. I often disagree with him. He put his email up on the screen. I used to yell at the TV all the time, and then I started firing off emails to him. Initially, they were cordial, but with not much of a response as time went on, I got a little nasty. I was different back then. This was way before I became Jimmy Chill. Next thing you know, we were going back and forth almost daily, but the correspondence had often dripped with contempt. Till one day he said he had it with me, and he said if I thought I was so damn smart, I should come on the show and argue with him. I demurred. I said I was too fat, too bald. He said he'd see me on Good Morning America, and he said I wasn't that ugly. In retrospect, not much of a compliment. Everything's relative, but it's good enough for me. So I said yes. Within a couple months, I quit Good Morning America to be part of the regular Squawk rotation. I came in hot. Arguing, shouting, completely unmedicated back then. Well, why not? And it was a riot. But it was 100% exercise in trying to make you money. Haynes would chide me as Reverend Jim Bob of the Church of What's Happening Now, comparing me to a NASCAR driver who was sponsored by stocks I loved and metaphorically wore them all over my clothes and tattooed on my forehead. We would fight and fight, round after round, genuine screaming matches. At the end, I was so exhausted, sometimes I just collapsed and go home. Although it sounds a little chaotic, I do want to make one thing clear. We were all about trying to make money for you, trying to make it accessible, the process accessible. We constantly weave teaching between heated debates about stocks, aided by Joe and David, lobbing important facts in to make things more grounded. Oh, things were so different back then. Once I was on Squawk Box, I got on a circuit to talk to big audiences about the greatness of owning a piece of an individual company, because it could potentially make you so much money. In praise of individual stocks, can you imagine? We used to call it the greatest story ever told. You could find one stock and ride a compound with it and change your entire life. Fortunes were being made. Often people were making much more money with stocks than they were with their paychecks. Okay, so now we all know how it got out of control. The excitement turned into pandemonium and ultimately big losses if you didn't take something off the table. When the dot-com bubble collapsed, you had to ring the register on something. And if you did, by the way, you still came out way ahead. We don't talk about that. A lot of people didn't. But, boy, you could have made a ton of money. We collectively passed judgment on stocks after that year, coming to the conclusion that individual stocks somehow represented too much risk. It was just simply better to own the entire S&P 500. That is the prevailing ethos still. We even came up with a term. It's called single stock risk, as if owning one stock could send you to the poorhouse. Do you know what? I think enough time has passed that we can recognize that with stocks like an Oracle or an NVIDIA or a Palantir and so many others, we should be talking about single stock reward because it's back and people are making fortunes and you're maybe missing the boat. It is the central thesis to how to make money in any market, the need to marry some individual stocks with index funds. I don't forsake them, so you have a chance to truly change your life. I don't mean to make it sound easy. I actually talk about how I got shaken out of Oracle a couple of years ago in the book. In retrospect, big mistake. Still, it's more than nostalgia that I am feeling right now. It's a sense that people like you and me are realizing that real money is being made on a daily basis. It's not about greed, it's about awareness. And we can't just sit there only in an index fund when this money is being made right here, right now. Here's the bottom line. It's about a return to the days before the dot-com craziness, days when if you kept your eyes out, you could find yourself in NVIDIA. You could pick up an Apple on a discount of $226, down $7.56, or you could ride a Palantir from 50 to 100 to 150 to 200. Okay, it's not there yet, although I think it's certainly headed there. In other words, those early days of Squawk Box feel a lot like the market we're in right now, and it's a welcome return to form. I miss those days, but maybe they have returned, and we could all be the better for it. Sarah in Colorado. Sarah!
Hi, Jim.
Hi,
I
Sarah.
love your show.
Thank you.
Thanks for taking my call.
Of course.
We inherited a large amount of AT&T stock in January. Since then, it's gone up about 25%. Should we hold on to it as a
Yes. I want you to hold on it. This fellow Stanky is doing a great job. He's still got an almost 4% yield. They are executing at an incredibly high level, and congratulations. Well done. Let's go to Clint in Tennessee. Clint.
Hey, Jim. This is Clint from Knoxville, Tennessee. How are you?
I am doing well. How about you?
I'm doing great. I just wanted to say I really enjoy watching you on the show and appreciate how you break everything down for us.
Thank you so much, man. I appreciate it. How can I help?
Yeah, my question is about Duolingo. They recently beat their earnings estimates, but I believe that with the increasing AI pressure, customer backlash, and the new launch of Apple's live translation feature with AirPods 3, that this could be a good short position for a 12-month time horizon. What do you think?
Whoa, no, it's too good a company to short. I would sell it because I do like what Apple's come up in terms of translation. I go overseas quite a bit, do a lot of business, particularly my wife does, and we just need the buds now. That's all we need. We don't need the Duolingo. We tried the Duolingo. It's really hard. But anyway, that's my thinking. Look, in the early days of Squawk Box, it kind of reminds me a bit like today's market. People are realizing that individual stocks make you money. Index funds are fine, but owning a piece of an American company is fantastic. Oh, man, buddy, tonight, Klarna hit the public market with fanfare earlier today. I'm breaking down all you need to know about this new stock story. Then, we know the consumer's looking for a bargain. The off-price retailers provide just that. That's what's working. I'm going to give you my rankings of the three biggest names in the space. And we're always on the lookout for new and exciting stories, aren't we? So I'm sitting down with a satellite imaging company I know you're going to like called Planet Labs to see how they're helping customers with its unique daily imaging data and AI. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.